Hello and welcome to Startup Street. I'm Ritu Singh and with me is Shruti Mishra from the Mumbai studio. Here are the top headlines that we're tracking today. Payment platform MobiKwik makes a second attempt to list on Dalal Street, halves the fresh issue size to 700 crore rupees. MobiKwik declined against launching the IPO in November 2021 despite getting SEBI's approval, citing weak market sentiment.
Temasek makes its first bet in 2024, leads a $20 million Series E round in dairy startup Country Delight. Fellow Singapore-based venture capital Seviora also joins the cap table as per reports.
PhonePe has appointed former Yes Bank Chief Digital Officer Ritesh Pai as CEO of its international payments business.
Perplexity AI gets $73.6 million in a Series B round led by Institutional Venture Partners LLC. Other investors include Databricks Ventures, Nvidia, Amazon founder Jeff Bezos. Startup now valued at over $500 million.
And OpenAI is gearing up to launch its online GPT store next week, which will allow users to sell and share custom versions of AI models based on the company's large language models. All right, so those are the headlines that we're tracking for you today on Startup Street. But in what's brewing, Fintech platform MobiKwik has refiled its draft IPO papers with market regulator SEBI. Now, the company has slashed its issue size down to 700 crore rupees in this fresh offering. Remember, the company had earlier filed its draft papers for the first time in 2021. At that time, it had targeted a fresh issue of almost 1,500 crore rupees. However, at that time, it decided to delay its plans, citing weak market sentiment. Now that it has refiled its papers, what does that mean? Yash Jain is joining us with the details. Yash, you've been going through MobiKwik's fresh papers. Take us through what you picked up.
Well, that's correct, Ritu. So MobiKwik is hoping to be second time lucky with its D-Street debut. What has changed this time is that the fresh issue component of the IPO has been slashed more than half. In its first attempt, MobiKwik planned to raise about 1,500 crore as far as fresh issue is concerned. Now that number stands at about 700 crore. As per company's DRHP document, there's also a provision for a 140 crore pre-IPO placement, and if the pre-IPO placement is executed, then the fresh issue will get further reduced to the tune of about 140 crore. The company has rupees 539 crore in revenue in operations in FY23 and has managed to make that to about 381 crore in revenue from operations in the first half of FY24 itself. MobiKwik has been EBITDA loss-making in the previous 3 years, but in FY24 so far, the company has made an EBITDA profit of about 21 crore and net profit of about 9 crore rupees. The liabilities of MobiKwik have largely been stable, moved from about 443 crore to about 534 crore between FY21 to FY24. Now, the risks from the company. The first one is with respect to use of IPO proceeds. MobiKwik says that the management or the promoters of the company will have a broad discretion over the use of net proceeds. Promoters may be required to provide an exit to shareholders who do not agree with the change in the objects of the issue, but the company mentions that it cannot assure that the promoters will have the resources to enable an exit opportunity to its shareholders at the prescribed SEBI price. Now, potential regulatory action from RBI is another risk which it mentions. MobiKwik says that certain filings with RBI for allotments made to certain non-resident shareholders have been inadequate in the past. Now, the company has filed a compounding application with RBI for these inaccuracies. The company has said that it cannot assure that there are other instances of irregularities as far as the regulatory filings are concerned. Also, the company says that they have not been able to obtain certain credit rating. The company has not been able to sort of obtain this credit rating, and hence it may not be able to access capital to finance its operations and future growth. According to the company, non-availability of credit ratings may increase the borrowing cost also for the company. The fourth risk which it mentions is with respect to discrepancies in the ROC filing. MobiKwik has disclosed that certain corporate filings with the registrar of companies have discrepancies. The company says that it cannot assure that regulatory proceedings or actions will not be initiated against the company for these discrepancies. Fifth one, cannot trace some historical and corporate, documents and records. MobiKwik has said that it cannot, sort of trace certain corporate documents, and the company has also mentioned in its DRHP that it cannot assure its shareholders that no legal proceedings or regulatory actions will be initiated for this default. Now, the last one, and this is important, that is a significant rise as far as the customer acquisition cost or CAC is concerned. The customer acquisition cost per user for MobiKwik has risen by 78% between FY21 to the first half of FY24. Also, the total customer acquisition cost for the company rose by 83% between the same time, that is FY21 to the first half of FY24.
Well, Yash, thank you for those details. Appreciate you joining us today. Moving on, the online gaming industry was in the headlines all of 2023 for taxation and regulatory crackdown. In the new year, the sector promises brighter opportunities in terms of employment, real money gaming and Web3. However, addressing regulatory issues, promoting responsible gaming practices and fostering a vibrant domestic game development scene will be crucial for the sector to reach its full potential. To discuss this and more, joining me now are Nitish Mittersain, Joint MD and CEO, Nazara Technologies, Manish Agarwal, the founder of Kratos Studios, and Jay Satya, the lawyer of technology and gaming. Gentlemen, welcome to Startup Street. Like I said, first of all, wish you all a very happy new year. And there's been a lot of negative news in terms of taxation and regulation for the sector. But lately, we should start with the opportunities first. Nitish, coming to you first. Make in India is a big opportunity. If you could talk to us about the kind of employment the online gaming industry will provide, and how can India become the gaming nation of the world?
Sure. Firstly, wishing you a very happy new year and all my friends on the panel. So I think, we have been kind of pursuing this whole gaming opportunity in India from a Nazara perspective for the last 2 decades. And the way the macro factors like the number of cell phone users, the speed of data, the cost of data, digital payments ecosystem is really opening up a very large gaming market in India. And I think it is imperative for us as a country that has, such great development capabilities to make sure that we are developing fantastic games for our home market versus being dependent, only on global games and global developers who will come and service our players and our market. So I think Make in India for India is not only a large opportunity, but also a very important opportunity for Indian developers to capture. And or something we as Nazara are focusing a lot on, and also very hopeful that the government and other stakeholders, really focus on this aspect. I think the second important point is, can Indian developers, build for the world? And in recent examples, we have seen in the recent years that Indian developers are actually able to compete globally and, do very well. So I think Make in India as an export opportunity to bring in Forex for the country is also a big opportunity that we should really be focusing on. And the third thing is Make in India from a services, right? I think we can do a lot of service work, development work for global game developers and giants outside. So all these aspects, if you were to consider, I think gaming for India is, multi-year, next decade, India can be really the gaming nation of the world. And we all need to really push aggressively towards that.
All right, picking up from what Nitish just said, and Manish, coming to you now, what kind of opportunities do you see for Indian game developers building for the globe? Do you see India becoming a developer hub like Turkey? And if yes, then how soon?
Hi, thank you. Thank you for having me here and wishing everybody Happy New Year. Good to see Jay and Nitish. I truly believe that, just picking up from what Nitish said, we have the talent, we have the capability, we have the domestic market. And not only that, we have now, last 10 years, the generation which has been really playing games on mobile. So we have that innate, intuitive ability to understand what needs to be done to make a great game. And I think examples within our Nazara portfolio of Kidopia doing great games from India. There are other studios which have done very, very well. And I think the more amount of investment comes, more amount of M&A activities happen, that will spur investment into great teams, which are building in India for the globe. And that's what happened in Turkey in 2014 with the exit of P Games. Many offshoots came in, and today Turkey is the most fertile ground for outstanding global studios. And I think that's what is going to happen in India too.
Okay, all right. Nitish, coming back to you, I want to focus now on some of the new gaming trends like Web3, VR and AI. If you could tell us what's happening here and if you could elaborate on the huge potential.
Sure. One great thing about gaming is that, technology is always changing. It keeps us on our toes, but it's also extremely exciting. At this point of time, like you rightly said, Web3 is a very interesting space to operate in. We've seen a few hype and buzz cycles in that segment, as it happens in all new technologies. But I think smart asset ownership for gamers, where they can actually own the digital assets, right, that they are purchasing in the games, the time and effort that they are spending in the games can be converted into some kind of monetization. I think a lot of these can be enabled by Web3. And I do believe that in the years to come, it will become a very important driving Web3 world. I think the other technology I'm personally very excited about is virtual reality. At Nazara, we have been looking at this for nearly a decade. It's taken much longer to kind of emerge as a viable platform. But now with three major companies, global players, right? Meta, Sony, and Apple competing on that, the technology is moving very fast. The experience is already fantastic. And I think in the next 2-3 years, you will see virtual reality, gaming to the head, coming fantastic. And the last, I think, thing that I'm at least very excited about is the generative AI and how AI is kind of infusing how games are made, how users are engaged, how smart AI characters can engage with users. A lot can be done over there, right? If you were to put all of these technologies together, I think Web3 into VR, into AI, I think the next 3 years will completely transform gaming today. And that's what we are very excited at Nazara today.
Sure. All right, before I bring in Jay, Manish, very quickly, if you could answer, we've got over 450 Web3 startups in India, and the Indian Web3 industry is expected to grow by $1.1 billion by 2032. Ironically, funding into Web3 startups is down 82% year over year since 2020, and 2023 being the lowest. So what is the reason for this?
I think a lot of tourists, both builders and investors, have fled, and which is a very good thing for people who want to really build something solid for next 10, 15, 20, 30 years. And I think that's what has really happened, and which is a really great sign that we will have solid companies coming out of India. And that's what at Kratos we are really building a global gaming distribution platform. To truly disrupt the current ecosystem.
Sure. Jay, coming to you now. Rules issued by the Ministry of Electronics and Information Technology to regulate online gaming and setting up of self-regulatory bodies to oversee the sector is a positive for the sector. What the sector is fighting for is over-taxation. How are you planning to navigate that? What conversations are you having with the GST Council?
Thanks, Shruti. Wishing you and all the viewers a very happy New Year, firstly. As you rightly said, 2023, the headlines was all about GST for the gaming sector and how the 28% would kind of be a killer or a killer blow or a spoiler to the mood. But from 1st October, all the law is enforced that there is 28% on deposits, which all the online real money gaming companies have to pay. And the gaming companies have complied with that. For the last quarter, they have paid 28% on every deposit made by a customer into the wallet. Of course, when the GST Council had taken that decision, they had also indicated that they have an open mind that within 6 months from implementation, they would take a relook at this whole thing, the taxation structure, and if needed, they are very open to changes or changing the structure. So, right now there is no conversation as such that is going on, but in the next quarter, certainly there would be a discussion whenever there is a GST Council meeting, and GST Council and the Finance Ministry would be looking at the numbers, would be certainly cognizant of the troubles that the gaming companies have faced with this new taxation.
All right.
Several startups have, also shut shop or, massively downscale. So all these issues, we are quite hopeful the GST Council will take cognizance and come up with something, with some changes which would be better for the industry.
All right. One final question. The union budget is around the corner. What is the big ask from this sector? Nitish and Manish, if you could quickly answer in 10 seconds. Nitish, why don't you go first?
Sure. I think if the government can consider setting up a special economic zone for game development and provide a variety of incentives to really drive what we discussed earlier in terms of, the Make in India for India and Make in India for the world, I think that would be fantastic. I also think it's very important for the government to provide all clarity on all aspects so that, a very strong foundation can be laid on top of which we can build fantastic businesses. The unclarity in RMG, as you've seen, has created a lot of confusion and pain in the last year.
Absolutely. Manish, do you agree with Nitish? In 10 seconds, can you tell us your big ask?
My is just two very simple: creating frameworks for global capability centers in India. Second, invest in skilling of talent through education policy in gaming.
All right. Unfortunately, we've run out of time. But gentlemen, many thanks for joining us on Startup Street. It was a pleasure talking to all three of you. Thank you so much.
Thank you. Thank you.
Well, thanks, Shruti, for taking us through that conversation. An interesting space, the gaming space. We'll continue our focus on that. But on the hot seat today, digital lending startup Zype is focused on making credit accessible to the next generation of borrowers in India. Founded in 2022 by former Cash CEO Yogi Sadana, Zype launched its app in 2023 and offers instant personal loans of up to 5 lakhs, apart from other services as well. Now, it claims it has disbursed 1 lakh plus loans since its inception and is targeting a 500 crore rupee loan book by mid-2024. Now, joining me to discuss the fintech's plans ahead and its growth trajectory is the CEO, Yogi Sadana. Yogi, welcome to Startup Street. Thanks very much for your time here. Briefly for our viewers, give us a sense of what you're doing at Zype, which is different from what we've seen from other fintechs. Why only personal loans, the focus on millennials, and the products you're, offering with the average ticket size, we believe, of about 30,000-40,000 rupees.
Yeah. So, hi, Shruti. Hi, Ritu. Nice to meet you today. And wishing a very happy new year to you and to your viewers as well. So we are very focused on the fintech lending industry. And other than lending, we also provide very actionable insights to our customers, which could be basis on their credit products and also on their budgeting needs as well. We also have a small bill payments feature, so to keep the customer engaged. But overall, the basic product is to provide instant credit to our retail customers out there in India. I think like you mentioned, what's the real differentiation? I think we are sticking to our promise of providing instant credit decision to our customers and help them in terms of when they need this money into their wallets.
Yogi, just a clarification, you're targeting this 500 crore rupee loan book by mid of this year, in the next 6 months. Are you doing this via your own NBFC, or this is going to be in partnership with other banks and NBFCs and not on your balance sheet? And secondly, what will be the driver of this demand where you're anticipating to disperse about 500 crores?
So a great question. Basically, we have our own NBFC through which we want to lend. We want to lend this book. I think we have found a great product market fit for ourselves over the last 6 months since the time we have got into business. So we believe that with all the machinery that we have put in place within the organization, we should be able to witness this growth. And most of the business that we do is not extensively into tier 1, where there's a lot of competition. Basically, we have expanded ourselves to tier 2, tier 3 markets, where we are seeing a lot of growth because of increased employment opportunities in those markets and are a bit pristine from a credit penetration standpoint as well.
Okay, Yogi, quickly, how many new users are you adding monthly above that 2 million that you have? And do you expect the pace of growth of unsecured personal loans, the segment you operate in, to slow down because of the recent RBI rules?
So the demand of the consumers are not going to come down because we have seen very robust demand over the last 3 to 6 months. As I said, we do believe that this demand, a large part of the demand in the tier 2, tier 3 segments are still sort of unmet. So that's where we see opportunities of growth for ourselves. And like I said, I think the greatest advantage that we provide to the customer is an instant credit decision. So people believe that the decision that we provide and at the transparency and the affordability at which we provide makes a lot of difference. I think in your previous question, what I missed to
Yogi, thanks very much. That's all the time we have, but thank you for sharing your thoughts here on CNBC TV 18.
And with that, it's a wrap from Ritu and me on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.